All right, so Bill, give us a sense, when you're looking at this, what are the ramifications of this job report? What do they show, and what do they potentially mean specifically to the Fed?
Oh, this job report is absolutely critical because of all this uncertainty going around and people talking about cutting back on payrolls and cutting back on output and cutting back on investment. All the talk about cutting back has yet to show up in the hard data. And the most important piece of hard data for the Fed is going to be the jobs report. And let me say that, you mentioned that there's a drastic slowdown from 177 down to 125, but 125 is more than enough to keep the unemployment rate steady at its current level. In fact, you can even go below that to closer to 100,000. So I think the labor market and the economy in general is doing very well. GDP numbers show that domestic final sales, if you knock out the imports, has been growing at 2.5% in real terms. Those are fantastic growth rates.
All right, so just in all fairness, 4.2% is historically a relatively low unemployment rate, but the unemployment rate certainly ticked up in the last couple of months or the last year or so. So you're mentioning that 125,000 is strong enough to keep it where it's at, but directionally, what do you think about what's going on? On CNBC, our colleagues put out a great article about layoffs accelerating. Procter & Gamble, 7,000 jobs. Microsoft, several thousand jobs as well. We are starting to see layoffs. How does the Fed view something like that?
I think the Fed's going to have to tease it out between cyclical layoffs because of the economy slowing down and because of layoffs because of technology. We already have a steady softening in the market for programmers and a lot of AI people because the AI itself is doing so much of the entry-level work. Even mid-level people are starting to feel the pressure. So I think there's a secular downtrend in the employment levels that are needed to sustain businesses. But the Fed's going to have to tease that out from just a typical downturn.
All right, so we also got the Beige Book, and I know it's backwards looking, Bill. I think economists like yourselves, you always point out that it's backwards looking, but it gives us some insight into how the Fed's viewing things. They're seeing rising prices. They're seeing hiring slowdowns. We're talking about layoffs, but also just hiring slowing down in general. How concerning is that when we're talking about that dual mandate of keeping prices steady, but also full employment?
It's concerning because people are so nervous about the state of the economy, a lot of it because of talk about tariffs. But again, the Beige Book is part of that pack of soft data that is so contradicted by the actual hard data that comes out. Job openings, for example, the latest JOLTS numbers show that job openings did not show that kind of drastic fall off or nor did it show any kind of increased layoffs. So again, the hard data, which the Fed bases decisions and policymaking on, has yet to show the fears in the soft data.
All right, here's the question we really need your expertise for. The president and Xi Jinping had a call yesterday. We don't really know how it went. We don't know what's going to happen next. But hypothetically, how does a potential China trade deal, how does it deal when it comes to tariffs to other countries? How does it change the math when it comes to the Fed?
Oh, this is just going to be a huge game changer, Frank. This is the most important event yet to come because what we're trying to do is reshape the global trading system. And we're talking about the number one and number two largest economies in the world, setting up an agreement that'll be a template for the rest of the world. So this is going to be the real game changer. If we can get this deal done, I think it's going to be, onwards and upwards. But that uncertainty about whether or not we can get the deal and get all of the peripheral stuff like the rare earths and other things in place, that's the big holdout against any kind of forecast for things resuming at any kind of normal pace.